As always guys, this is just for entertainment purposes only, this is not financial advice. Hey guys and welcome back to my channel. I just want to give an update on agronomics. I created a video on agronomics 6 months ago in May, and now 6 months later I would like to have a brief look together with you guys on how the company is doing now. Keep in mind, this is not investment advice, I'm not a financial advisor. I could be the village fool telling you fairy tales. Do your own due diligence. Now the first thing we notice about agronomics is that they have a new website. I like the new website. I'm happy there is a picture of just a normal burger on there and we don't have a picture of something in the lab. I think that just freaks people out. Otherwise, the only thing that I have a remark about is that I have to go to About Us, latest news, to get the latest news, because that's basically the part where I spend the most time in. When you're going to that page, you can see there has been a ton of news about agronomics and about the companies that agronomics has invested in. So I want to go over what are the new companies that agronomics invested in. What's the financial status? What does the portfolio look like now? Is it a good investment? Because I also want to go to what's the stock value of the company and such. So the first thing I want to go over is new investments. So the first you have is California Cultured. This is their website. So welcome to a new age of sustainable and ethical chocolate. Those who are a little bit familiar with chocolate knows that chocolate really requires a huge amount of water to be produced. Chocolate is getting also quite more and more rare in the world. And of course you have other side effects like deforestation and free child labor. So if there now is a company that can create it from without these, so from a factory, from a lab, I can only say wow, great. I'm very excited about that. I'd love to try that. Now the second company, the Every company, just like the California Cultured, it's located in California. So that's what I like. I mean, I like it when they invest in US companies because I can see a lot of progress there with the approval of the food. And the Every company, it's already has products, and it's actually producing proteins. So it's fermented proteins. So we're seeing here a smoothie full of green proteins, so no eggs. So when you're in the gym, would like a smoothie, now you have the chance to have an egg-free smoothie. And it's also, yeah, they're making a lot of advertising with their eggs. You can see that here on their website. So yeah, they really go after the eggs. Now the second one, Ohio Valley, they actually don't really have a website. They have on ohiovalley.com, but it's pretty empty. What I can see on Crunchbase is that they're located in Vietnam. So yeah, that's pretty good. I like that. Another something in the world. The other thing that I can find about them is that they have a Facebook page, also have Instagram, LinkedIn, and there we can see what they're actually doing. So they're creating cultured meats, but then steak, and the really expensive steak as well. So I think of the vegans that I know, when you would ask them what do you miss the most in meat, and I think lots of them are going to answer steak, because you can probably find a lot of replacements for burgers in vegan food. So you have what's called the Beyond Burger. It looks and tastes a lot like actual meat, but having a steak, vegan steak, so that's much harder. So if there is a company that can produce that, great. And what I also like, and you'll see that later when I go to the portfolio, is that actually Agronomics took an 18% stake in this company, so that's really good. So let's go a little bit more about the financials of the company of Agronomics. So they have a financial report, 30th of September 2021, so just 2 months ago. That was the current state. So their net assets, it's 103 million, or it's 12.99 pence per share. So that's okay. I think what's interesting here is that there's an increase of 10.93 compared to the last quarter. Now that's a pretty good increase. If they could get that increase every quarter, it would mean a growth of about 44% per year, and it means that the current share price is about 25 pence, but it would mean that in about 19 months we would reach the current price of 25 pence. So that's quite good, because it means that you can justify the price of the stock because of the high growth of the company. And I think with a growth of 44% per year, that's justifiable, to be honest. So I think just the current price is fair, and I see well, a little bit more upside even by the end of the year. So we're already end of November, we're approaching December, so yeah, I think that means in 17 months at the current growth rate we'll have that shared price, so that's not bad. It's about a year and a half. So I think what else can you see here? Retained earnings, so that's something that Agronomics said they do. They take a 10% profit sharing for the increase, or was it 15% for the amount of increase that goes, so it's actually written on their balance sheet. They actually haven't withdrawn it from the cash, so there's still an invested cash of 55 million, so I like that. That means they still have cash to burn. So this is my sheet, my portfolio of Agronomics, the portfolio of Agronomics, and what we're seeing is actually the value that I have here, 103 million, is almost the same as what we saw in the Agronomics sheet of September. I think there it's 103.8, here it's 0.5. I'm guessing it's more related to the currency reconversion than anything else. So what we're seeing here, since September, they invested in these 3 companies, which we've already discussed. I also, of course, adapted the cash position, so 46 million cash. I think they had 60 something when I discussed Agronomics in May, so that's actually a good thing, because they still have quite a bit of cash to go on, to continue. Once they run out of cash, they either have to stop investing or dilute shareholders. I don't think they will stop investing, so probably will face another dilution, but it will, in my opinion, be above the current share price, probably above 30 pence somewhere. So I think there is plenty of space to grow without us having to worry too much about the dilution. So I think that's okay. I will probably see that when you're seeing they're burning 20 million per 6 months, so maybe in 1 year from now there will be another dilution, but we'll see. We'll see what brings. I mean, the other way to bring in cash would be to have one of the companies IPO, but I don't see that happening within 1 year. I think dilution is okay, because remember, you're losing shares in the company, but you're getting a chance also to invest in more companies. So as long as the cash is well invested, and I said the same thing 6 months ago, I'm fine with the dilution. At a 44% growth per year, I can also live with the retained earnings, but they do have to keep up that growth. Now, apart from the new companies they invested in, they also reinvested in Formo. And what did we saw in this investment round? There was a 650 increase compared to the last investing round that occurred less than 2 years ago. So that's a huge upside, almost 8 times the previous valuation. Also, New Age Meat and Celix, they also had new rounds. New Age Meat, little over a year, 38% increase. Celix, a 500% uplift in about a year. So those are some pretty crazy growth numbers. So what are we seeing here? Also, lots of the companies have not been reevaluated in a long time, especially the ones at the bottom, but also the two at the top here, Solar Food, Blue Nalu. No reevaluation since 2020, so over a year ago. That means that if you would evaluate all companies today, you might have a larger value than 103.5 million. But that's of course speculation, so that's hard to say. But I mean, Solar Foods, Blue Nalu, they are really beasts. Mosamid, also a beast. Last valuation over a year ago, they started to build a factory. So I'm expecting lots of that. Shiok Meat, also a lot of times that they've been into the news. So I wouldn't be surprised. They're located in Singapore, which is very cultured meat friendly, so good for them. So when we look then at the graphics, so this is what it looks like. Basically still a 40% cash position, and then you have Solar Foods taking the lead, 11% of the portfolio, Blue Nalu 10%, and then Formo, they made a really big jump forward, so they are now 7% of the portfolio. And then Meatable, every company, new investment right away, 5%. Mosamid, 5% as well. Okay, another thing I would like to quickly add is the Food and Safety Inspection Service, and this is pretty big. They're asking for proposed names on meat and poultry products from cultured cells. I think this is really important because they wouldn't be doing that if they weren't expecting these products to start hitting the market. It only runs until December 2nd, so I'm very curious what will happen after December 2nd. Can we really expect a bit of approvals for the coming year? We're seeing that lots of these companies, of course Mosamid in Europe, but lots of companies are starting to create factories also in the US for cultured meat. So I think, if cultured meat gets approved, that is going to be a catalyst for the valuation of the companies. Now we're looking at the stock price, and I will close with this. I bought my original supply of stocks here in June, a little bit lower than the current price, but not much. And then the stock pretty much traded sideways, had a little bit of a dump here in September because there was pretty much no news in August. And here, after all the news coming in, they added 3 extra companies. Then you had a large stock boost, and here had another fall. Might be related to the fact that we have quite a bit of warrants at 27.5, and perhaps a few of those have been exercised. So I think those warrants are now a year and a half ago, a little bit more. So hopefully lots of warrants have disappeared after this. And as I said, in my opinion, I believe that the value of the stock is justified because we will be reaching enough of that at the current growth of 44% in approximately 17 months. Additionally, lots of the companies have not been reevaluated, so we might already be pretty close to this price, closer than we think. So that's why I decided to add another 12,000 shares myself, now totaling how many shares? 29,000 shares. of agronomics, and yeah, I'll probably wait for the next NAV report and see where the price is going. I might add a few more in the future. Okay, so thank you all for watching. I hope you enjoyed this video. If you've enjoyed it, please like, please subscribe. Small YouTuber here, so you're really helping me a lot with that. So thanks for watching, and see you next time.